Bismillahirrahmanirrahim. This is the third video on accounting for not-for-profit organizations. In this video, we will explain the complexities and types of funds in fund accounting in not-for-profit organizations. We will solve an illustration comprehensively where we will generalize transactions, post journals to ledgers, prepare post-closing trial balance, prepare statements of activities, statement of financial position, and statement of functional expenses. In addition to this, we will solve two more exercises and explain how to journalize transactions using funds for a not-for-profit organization and a not-for-profit college. Please like, subscribe and share my channel to search for accounting lessons and hit the notification bell button to alert you for the latest video. For all of your questions, comments and suggestions, please put them in the comment section below. And for webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Accounting is AK. We hope that this video helps students in their academic development and teachers in enhancing their lesson plans and teaching methodologies. We hope that this video helps aspirants of CPA, AICPA, ACCA, and CMA programs. We also hope that this video helps students of Masters in Financial Accounting, Masters in Taxation, Masters in Governmental Accounting, and students who have joined training courses of Saudi Organization for Certified Public Accountants, SOCPA, and other accounting program aspirants. We also hope that this video helps fresh graduates who have joined governmental or not-for-profit organization and want to refresh their learning about fund accounting in not-for-profit organization. So let us start with fund accounting in not-for-profit organizations. Fund accounting in not-for-profit organizations is not permitted by GAAP, but some use it for internal record-keeping purposes. Fund accounting can cause complexities, like using funds may cause the need to record resource transfers from one fund to another. When funds are used in the accounting process, the not-for-profit organization may need to separate fund balances into more than one net asset classification when preparing financial statements. When they use funds, not-for-profit organizations generally use the following types of funds. The first one is unrestricted current fund, and it is also called operating fund or general fund, and they are used to account for resources over which governing boards have discretionary control. These resources are available not only for general operating purposes, but also for transfer to other funds. The second type of fund is restricted current fund, also called restricted operating or current restricted funds. These are those funds whose restrictions are donor imposed. However, when funds are used, restricted current funds may include not only donor contributions that are restricted for specific operating purposes, but also resources received on contracts whose use is limited by external parties other than donors. The third type of funds is the endowment funds, and there are several types of endowments. For example, we have permanent or pure endowment, and these are those wherein the donor specifies that the principal be invested and maintained and in perpetuity, and only the income earned may be used for operations. Then we have term endowments, and these are those that are available for use in operations after a specific time period or the occurrence of a specified event. The third type of endowment funds is the quasi endowment funds, often used by colleges and universities, and these funds are set aside by the governing board for lengthy but unspecified period of time. Uh, there is a fourth type of fund as well. We call it as plant fund. They are also called land or building or equipment funds, and such funds may be used only for capital asset acquisition, or they may be used for current capital assets too. Let us see how journal entries are recorded using funds by not-for-profit organization. Now, Kezar Cares, a voluntary health welfare organization that offers counseling services to abused persons of all ages, is formed at the beginning of 2013. It receives contributions from various sources and performs counseling services under a government contract. Kezar classifies expenses by object of account, salaries and other within four major functions: counseling, education, administration and fund. Kezar uses fund accounting because it believes fund accounting is useful for internal accounting purposes. It prepares financial statements, however, in accordance with generally accepted accounting principles. Kezar uses a unrestricted current fund, restricted current fund, endowment fund and a plant fund. Donor gifts with time or purpose restrictions are recorded in the restricted current fund. Resources received and expenses incurred under the government contract are also recorded in the restricted current fund, even though the net assets are not donor restricted, because Kezar believes it will improve controls over contract cost. To simplify its accounting, Kezar accounts for its capitalized capital assets in the unrestricted current fund and uses the plant fund to account only for financial resources that will be used to acquire capital assets. Kezar has the following transactions in 2013. For each transaction, the fund in which the transaction is recorded is shown in bold to the left of the journal entry, and the net asset classification where applicable. So we have to make the journal entries, and at the beginning of the year, Kezar received unrestricted promises of cash donation in the amount of 130,000. So this is contribution receivable for 130,000. Kezar expect to collect 115, so we have unrestricted support contribution of 115 of that amount, and estimate that 15,000 will not be collected, so 15,000 is the allowance for uncollectible. Now, Kezar collects 118,000 of the unrestricted promises to donate cash and writes off 12,000 as uncollectible. So, they have collected 118,000 cash. So, allowance now is going to be debit by 15,000. Now, contribution receivable was 130,000 and this will be credited, and the balance will be 3,000 and this will be recorded as unrestricted support contribution. Let us move on to the next transaction. Kezar receives two donations that contain restrictions imposed by the donor. Cash in the amount of 20,000 that can be used only for research in the counseling methodology. So there is a temporary restriction. Cash is debit by 20,000 and temporary restricted support is credited by 20,000. Then investment that has a fair value of 100,000, the donor making the second contribution stipulates that the investment corpus should be maintained in perpetuity. That means this is a permanent restriction. So investment is debit by 100,000 and permanent restriction is credited by 100,000. We move on to number 4. Kezar received the following donated services. A psychologist donated 20 hours of her time to Kezar's counseling program. Kezar would have paid 4,000 for these services, and since this is a technical skill service, this will be recorded, and that will be recorded about 4,000. Then a lawyer donates 10 hours of his time to review a contract. This also requires technical skill and will be recorded. And because there is no restriction, so there is unrestricted support, credit by 6,000. We move on to transaction number 5. Kezar holds a book sale as part of its fundraising program. It raises 12,000 in cash but pays 2,000 of that amount for various expenses. So cash is debit by 10,000, expenses are debit by 2,000, and there is no restriction. This is credited by 12,000. Now services that are provided by school for selling refreshments, they don't require any technical skills, so we are not going to record this transaction. If we move on to number 6 now, Kezar pays salaries of 14,000 and other expenses of 2,000 in performing research into counseling methodology using the restricted gift in transaction number 3. So we are spending. So first of all, we have to reclassify our assets. So temporary restriction net assets reclassification out will be debit by 16,000 and cash will be credit by 16,000. Then we have made the expenses. So expenses for counseling services is debit by 14,000 and expenses counseling other expenses is debit by 2,000 and unrestricted net assets reclassification in is credit by 16,000. Okay. Then we move on to transaction number 7. Income of 4,000 is earned and received on the investment in the endowment fund. So we are receiving 4,000. So cash is debit by 4,000, and this is an unrestricted revenue. So that is going to be credit unrestricted revenue investment income. We move on to number 8. Kezar contract with the government agency for counseling services provides for quarterly advance payments. At the end of each quarter, Kezar is required to submit a statement of actual cost incurred. Based on the statement, Kezar is entitled to receive the difference between the advance and its actual cost. In accordance with these arrangements, Kezar receive an advance payment of 27,000. So they receive, so 27,000 is debit, and because this is an advance, so this is a deferred revenue of 27,000. Next, they have paid for counseling salaries. They have paid 26,000, and there are other expenses for 4,000, and cash is credited by 30,000. Now and then they are going to receive the balance as well. So they have made first of all deferred revenue is going to be settled. This will be debit by 27,000. We are going to receive 3,000 from the government, and the unrestricted revenue contract will be credited by 30,000. Okay. Next, we go to the next set of transactions. Now, Kezar incurs the following expenses in undertaking its unrestricted program. All the expenses are paid in cash except 4,000. So we have counseling expenses for salaries 30,000, others is 5,000. Then we have expenses for education 20,000, expenses for administration 9,000. Then we have expenses fundraising 5,000, and fundraising others we have 2,000, and we are not paying 4,000 of this amount, and the balance we are paying, and that balance will be 67,000. We move on to number 10. Before preparing financial statement, Kizar ascertains that the investment held in its endowment fund has a fair value of 102,000. That means investment goes up by 2,000. You can recall that the investment was for uh, where is the investment? Investment was for 100,000. It is now 102. So investment is debit by 2,000, and there is a permanent restriction. So that's why permanent restriction is credit by 2,000. We move on to number 11. Kezar trustee decide that Kezar Care should construct a building rather than continue to rent any space. Kezar approaches several philanthropists to raise funds. Sarah Dawn says she will contribute up to 50,000 to match other contribution as received dollar for dollar. Oscar Cat says he will contribute 25,000 provided Kezar raises a total of 100 from all other donors. As a result of its fundraising program, Kezar raises 12,000 from other donors. So when they are raising 12,000, so cash is debit by 12,000, and this is a temporary restriction because you are going to use this money for building purposes, constructing a building. And then they have sent a letter to Miss Dawn advising her of the receipt of the 12,000. So contribution receivable is debit by 12,000, and temporary restricted support is credited by 12,000. Then we move on to number 12. Kizar received a gift of 5,000 in cash, so cash is debit, but then he can use this money to finance the 2014 activity, so this is a temporary restriction. So this completes the general entries in this illustration, and based upon these 12 general entries, we have made the T account for first of all for the unrestricted current funds, and we have over here 1 2 3 4 5 6. So we have made the T account for all these, and on the basis of the T account that we have prepared, we have made the pre-closing trial balance for the unrestricted current funds. So we have cash 65,000, we have accrued expenses 4,000, unrestricted support contribution 118, then we have unrestricted support donated services 6,000, then we have unrestricted revenue investment income 4,000, then we have unrestricted gain special events 12,000, then we have unrestricted net asset reclassification in satisfaction of program restrictions 16,000, then we have expenses counseling salaries 44,000, we have expenses counseling others is 11,000, expenses education salaries is 20,000, then we have expenses administration salaries 9,000, then we have expenses administration others 2,000, then we have expenses fundraising salaries 5,000, we have expenses fundraising others 4,000, and we make a total that is 160,000. So we have made the trial balance correctly. Next, once we have done the unrestricted current funds, we are going to go for the restricted current funds, and for the restricted current funds we have the restricted current funds over here, and we make the T account from these, and based upon this the T accounts are here, and we are going to prepare the pre-closing trial balance for restricted current funds. So once again we have cash 6,000, we have accounts receivable 3,000, then we have temporarily restricted support contribution 25,000, then we have temporary I made a cash is 6,000, accounts receivable is 3,000, then temporary restricted support contribution is 25, unrestricted is 30. Then we have temporary restricted net reclassification out, it has a debit balance. Then expenses counseling 26, and we have expenses counseling others 4. So this makes a total of 55,000. So we have done for unrestricted fund, we have done for the restricted funds, and next we go for the endowment funds and the plant fund, and we have the T account for the endowment fund and the plant fund. We have to pick up the endowment and plant from the journal entries we have already made from here, and based upon this we have the endowment fund investment is 102,000. We have permanently restricted support 100,000. Then we have permanently restricted net unrealized and realized investment gains and losses of 2,000, and the total is 102,000. Next we prepare the pre-closing trial balance for the plant fund, and for the plant fund we have cash 12,000, temporary restricted support of 24,000, and contribution receivable of 12,000, and that makes 24,000. Now based upon these 4 pre-closing trial balances, we are going to prepare the statement of activities, and let us see how we do that in this slide. So we have the 4 pre-closing trial balance we have already made in the previous slides, and we are going to prepare the statement of activities, and we start with contribution. Now the unrestricted contribution is 118,000. Then we have the temporary restriction, and temporary restriction is 25,000 and 24,000, that makes 49,000. Then we have permanent restriction, and permanent restriction is for 100,000. So the total comes out to be 267,000. Next we have the donated services, and the donated services is 6,000. Then we have contract revenue of 30,000. Next we have special events, and special events is for 12,000. Then we have investment income of 4,000. Then we have unrealized and realized investment gains of 2,000. Then we have net assets realized from restriction, satisfaction of program restriction. So we have 16,000, and reclassification in, so we have 16,000 in the temporary, in the unrestricted column, and the same amount will be there is temporary restriction out, this is going to be negative now, as this is in the debits column. So we make the total, and the total is 186, 33, 102, and we will make these total. These are 6,000, 30,000, 12,000, 4,000, 2,000, and this will be 0. So this is 321,000. Next we go for the expenses and we look into the counseling expenses. So we have 44 plus 11, that makes 55, and then we have 26 plus 4, that is 30. So 55 plus 30 is 85,000. Next we have the education, and education is 20,000. Then we have administration, and for administration we have as salaries 9 and others 2, that makes 11,000. Then we have fundraising. Fundraising is 5 and 4, that makes 9,000. So the total expenses are 125,000. So we have counseling 85,000, education is 20,000, then we have 11,000 and 9,000. So the total is 125,000. Now next we go for the changes in the net asset, that is total revenue minus total expense. This will be 61, this will be 33, this will be 102, and here it will be 196,000. There are no beginning balances for the net assets, so that comes out to be 0. So the net assets at the end of the year is 61,000, 33,000, 102,000 and 196,000. Okay, so that's how we prepare the statement of activities. And next we are going to prepare the statement of financial position, and we start with cash, and cash is 65 plus 6 is 71 plus 12, that makes it a total of, makes a total of how much? This will be 65, 6 and 12, that makes 83,000. Then we have accounts receivable, and accounts receivable is 3,000. Then contributions receivable restricted for building acquisition, and this is going to be contribution receivable is 12,000. Then investment restricted for endowment is 102,000. So this makes a total of 200,000. We have accrued expenses and only one liability, that is 4,000. And then we have the net assets, the unrestricted. This comes from the statement of activities, that is 61,000. Then there are temporary restricted net assets of 33,000, and if you can recall of these, in let me show you the transaction number. In transaction number 12 we received a gift of 5,000, but we can use it only in the year 2014. So we have the next year general activities, that is for 5,000. Then we have counseling research, and counseling research was in, let me show you, counseling research was in transaction number 3, and what they say over here is that we have received 20,000, and of these 20 we have spent 14 plus 2, that it makes 16. So still we have a balance of 4,000, and that is for counseling research 4,000. And then we have for the building acquisition, and for building acquisition we have 24,000. So that's how we have the total split into 3, that is 33,000 in the statement of activities. Then we have the permanently restricted, and for permanent restriction it was 102. So we have 102,000. So the total net assets is 102. Permanent is 102, and the total net assets will be 196. Yes, and then to this we are going to add the liabilities, so that will make 200, and that's how the balance sheet is going to be balanced. Okay. Now in the next slide we are going to see how to calculate the statement of functional expenses. And for functional expenses we have the function as counseling, and for counseling we have the cost of counseling we have 44 plus counseling for salaries 44, and what else, and 26. So 44 plus 26 is 70,000, and there was others as well for counseling 11,000 and 4,000. So that makes 15,000, and the total is 85,000. Then we have education, and for education we have the 20,000 for salaries, so we just put 20,000 over here. Next we have so the total is 20,000, there is no other for education. Then we have for administration. For administration we have 9,000, and for others it is 2. So 9,000 and 2,000, that makes 11,000. Then we have fundraising for 5 and 4. So that makes 9, and that is 125,000, 104,000, and this will be 21,000. Okay. Next, let us look into another illustration on how to journalize transactions. And Oliver Place is a not-for-profit entity that cares for dogs until they are adopted. It uses a unrestricted current fund, restricted current fund, and endowment fund. It charges its expenses to the care of animal program, special program, and administrative expenses. So following are some of its transactions. We have to prepare the journal entry. During the year, Oliver Places received unrestricted pledges of 100,000. So contribution receivable is 100,000, and we are going to receive 95%. So that makes unrestricted support 95, and 5,000 is the allowance. We go to number 2. It received the following gift from various donors. Donor A made a gift of common stock that has a fair value of 20,000. So investment is debit by 20,000. The gift could be used for any purpose, so that's why this is unrestricted, that is 20,000. We go to number B. We have received a cash gift of 5,000. So cash is debit by 5, stipulating that it could be used only. So that means this is a temporary restriction of 5,000. We go to number C. Donor C made a gift of common stock that has a fair value of 50,000. Donor C stipulated that the gift and any gains on the sale of stock should be maintained in perpetuity. So both will be in perpetuity. So right now investment is debit by 50 and permanently restricted support is credit by 50. Next we go to 3A. Dr. D, a veterinarian, spent 10 days caring for the medical needs of the dogs. Those services would normally cost Oliver Place 10,000. So care of animal expenses is debit by 10,000 and this is an unrestricted support. It is credited by 10,000. Then number Dr. E, a kidney surgeon, spent 12 days feeding the dog. Now, feeding the dogs do not require a special skill, so there is no entry for that. We go to number 4. Oliver received dividend of 400 on the common stock donated by donor A and 600 on the common stock donated by donor C. So we have cash of 400 and 600 and these are unrestricted. So it is unrestricted revenue is credited by 400 and 600 respectively. We move on to the next transaction. At year end, the stock donated by donor A has a fair value of 22,000 and the stock donated by donor C had a fair value of 47. So here it goes up and here it goes down. So investment is debit by 2,000 in the first case, unrestricted gains and losses is credited by 2,000 in it because there is a gain. In the second, for the second one, here there is a loss of 3,000 and investment will be credited by 3,000. We go to number 6. During the year, Oliver Place collected 80,000 in cash. So cash is debit by 80,000 and contribution receivable is credited by 80,000. Then Oliver Place spent 3,000 on the special program designed to take calm dogs to visit elderly people. So first of all, we are going to reclassify temporary restricted and this is debit by 3,000 and cash is credited by 3,000. Now there is an expense of 3,000 and we can do it only from unrestricted assets. So it is credited by 3,000. Then they have paid the following expenses: care of animals and administrative expenses 40,000 and 30,000 and that is cash 70,000. Then cash gift of 12,000 were received from various donors who stipulated that the resource must be used in 2014. So there is a temporary restriction. So cash is debit by 12,000 and temporary restricted support is credited by 12,000. Finally, let us do one more exercise on how to record journal entries for not-for-profit college. Maniacs College is a small not-for-profit college known for its excellence in teaching accounting. The college uses fund accounting and has an unrestricted current fund, a restricted current fund, a plant fund and an endowment fund. So they have all the 4 funds. It charges its expenses to instruction and research, student services, plant operation and auxiliary enterprises. It has the following transactions: prepare the journal entries, show which fund is used to record each transaction. Okay. Revenues from student tuition and fees were 2,500,000. So cash is debit by 2,500,000 and this is a unrestricted revenue of 2,500,000. Okay. Then we move on to the second transaction. Revenue from auxiliary enterprises was 400. So cash is debit by 400. But now this is unrestricted revenue. Auxiliary enterprises 400,000. We go to number 3. Salaries and wages, all of which were paid. All are paid. Were 1,800,000 chargeable as follows. So we have instruction and research 1,200,000, student services expense 200,000, plant operation expenses 250,000. Then we have auxiliary enterprise 150,000 and cash is credited by 1,800,000. We move on to number 4. Materials and supplies costing 800,000 was purchased on account and placed in inventory during the year. So material and supply inventory is debit by 800,000 and accounts payable because we are purchasing on account 800,000. Then we move on to number 5. Material and supplies used during the year were 700, chargeable as follows. So we have made these expenses. Instruction and research expenses 300,000, student services 50,000, plant operations 150,000, auxiliary enterprise expenses 200,000, and the total is 700,000. Then a cash transfer of 100,000 was made from the unrestricted current fund to the plant fund. So we are transferring from unrestricted to the plant. So non-mandatory transfer to plant fund is debit by 100,000. Obviously cash is reducing, so cash is credit. And now we see we have received cash for general fund, so 100,000 cash is debit and non-mandatory transfer from general fund is. Now this is one general entry that is unique in the case of a not-for-profit college. We move on to number 7. The college received a cash gift of 20,000 from K. Sherman to finance a 3-year research project on the usefulness of fund accounting. So cash is debit by 20,000 and this is a temporary restriction, so this is credited by 20,000. Number 8, the college paid R at more 7,000 to do research on the project in transaction number 7. So first of all, the temporary restriction has to be removed, so it will be debit by 7,000 and cash is credited by 7,000. And now we are going to pay this expense of 7,000 from our unrestricted asset 7,000. Okay, we move on to number 9. P. Deflees donated 1 million in equity securities to the college, stipulating that the corpus and all gains and losses on the sale of the security remain intact in perpetuity. He also stipulated that the income on the investment be used solely to finance a chair in governmental accounting. So investment is debit first of all 1 million, and because the restriction is in perpetuity, so that's why this is a permanent restriction. Then at year end, the securities donated by Mr. Deflees in transaction number 9 had a fair value of 1,030,000. Income earned on the investment during the year was 45,000. So first of all, the investment increases and this increases by 30,000, and permanently restricted gains are going to gain is for 30,000. Then we and they have income earned on the investment is 45, so cash is debit by 45, and that is also a temporary restriction for 45. Now Antonio Harmer sent a letter to the college at the end of the year promising to contribute 25,000 to equip the new student service building if the college raised an equal amount from the other contributors. The college planned to write to the alumni to seek additional funds. Now, since the college cannot collect any money in this transaction, so there is no entry for this promise. So this completes the illustration on general fund accounting, and we have solved an illustration comprehensively and explained how to generalize transactions post how to post them into the ledgers, and how to prepare the post closing trial balance, how to prepare the statement of activities, how to prepare the statement of financial position, and the statement of functional expenses. So I hope you have enjoyed this presentation, and if you found value in this video, then please like, subscribe and share my channel, and hit the notification bell button to alert you for your latest video. For webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Remember, effective questioning brings insight, which fuels curiosity, which cultivates wisdom. If you have any question or any suggestion regarding this session, then please put them in the comment box below or by email, and inshallah I will reply you back. Thank you so much and happy learning.